Bitcoin could still surge another 27%, but only if it outruns the bear that's already licking its chops. That's the bombshell Stephen McClurg, CEO of Canary Capital, dropped on CNBC last Friday. And it's already lighting up trading chat rooms. While some crypto influencers are busy posting rocket emojis, McClurg is waving a giant yellow flag. He believes there's a better-than-coin flip probability that BTC will sprint to the 140K price, 150K zone before 2024 ends, then tumble into a full-blown bear market sometime next year. Let's unpack the numbers. Bitcoin is hovering around $117,867 at the time of writing. A climb to 150K would translate to a tidy 27% gain from here. Even the low end of McClurg's range, 140K, still clocks in at roughly 19%. In other words, the upside window may be narrower than most bulls want to admit, but here's where it gets controversial. McClurg isn't just worried about charts. He's worried about Main Street. "I don't like the economic standing at all right now," he told CNBC, arguing that the Federal Reserve has already missed two golden opportunities to slash interest rates. He's betting the Fed will finally blink in September and again in October. Futures markets agree. CME's FedWatch tool shows a 92.5% chance of a September cut, but McClurg thinks even that might be too little too late. So what's been driving Bitcoin's recent face-melting rally? According to McClurg, it's not retail FOMO or TikTok traders. Instead, he points to two heavyweight sources of demand. 1. Spot Bitcoin ETFs. Fresh inflows have been relentless. Every time a pension fund or family office reallocates even a sliver of its portfolio, it's like pouring rocket fuel on BTC. 2. Treasury firms and corporate treasurers. Think MicroStrategy copycats. These balance sheet buyers aren't day trading. They're scooping up whole blocks of Bitcoin and parking it for years. McClurg says sovereign wealth funds and even insurance giants are now asking the right questions, which is code for they're about to write very large checks. And this is the part most people miss. McClurg believes both of these demand engines are about to hit their rev limiters. Once treasury firms finish their allocation cycles and ETF inflows plateau, the buying pressure that has cushioned every dip could evaporate. Right as macro headwinds pick up. Cue the opposing camp. Michael Saylor, the ever-optimistic executive chairman of Strategy, formerly MicroStrategy, flat out rejects the idea of another crypto winter. Winter is not coming back, he declared in a June 11th interview. His reasoning? If Bitcoin isn't going to zero, then mathematically it's on a one-way trip to $1 million. No middle ground, no bear market pit stops. Matt Huggins, CIO at Bitwise, is singing a similar tune. In a July 26 video posted on X, Haugen wagered that 2026 is an up year, and that we're in for a good few years. Translation: the 4-year cycle narrative may be dead, and the old boom-bust rhythm could be replaced by a steadier stair-step climb. So who's right? The cautious institutionalist warning of an imminent cliff, or the laser-eyed evangelists promising perpetual sunshine? Here's the uncomfortable truth. Both narratives can be partially correct. Bitcoin could indeed tag 150K as a final euphoric blow-off top, only to give back 50% or more once the macro tide turns. Or, just maybe, the cycle dynamics have truly mutated thanks to ETF adoption and corporate treasuries, and we'll never see another 80% drawdown again. Controversial take. What if the next bear market isn't a price crash, but a time-based grind? Imagine BTC stuck between 90K and 120K for 2 straight years, while altcoins bleed out. Would that still count as a bear market, or just a really boring bull? Now it's your turn. Do you side with McClurg's 50% odds of a pre-bear spike to 150K? Or are you in Saylor's straight to $1 million camp? Could the Fed's next move be the pin that pops the balloon, or the booster that sends us into orbit? Drop your hottest take below. The community needs to hear it.